Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, I just wanted to focus in on asset market performance and then a few data points that help us understand the impact that Omicron is having. So just looking at asset markets yesterday, and really as Paul was discussing, volatility is one of those themes that's very evident in markets at this point, be that in equity markets or in bond markets in particular. And what we saw yesterday was just a real continuation of that, but some slightly different trends within it, and it just illustrates how geography can be quite important in performance. And we did see yesterday a better performance out of Europe, very much just building on a strong opening from the US markets. But as the day progressed in US time, we saw the markets there reverse. We saw the Nasdaq from being up 2% at one point to actually closing down around 1% yesterday. And that's really a function of some of those factors that we've been talking about with you over the past number of weeks and indeed months. The inflation theme, the concern as to how that is tackled, and in particular, what does that mean for central bank policy and changes in interest rates over the course of the year? And indeed, if we look at market expectations, they continue to price in more interest rates than we were looking for even at the beginning of this year. So in three and a bit weeks, we're now pricing in more aggressive interest rate increases. And that's true in both the US and in the UK. I think the other factor that we have to consider at this point in time is results coming through and how results are impacting sentiment, but also impacting how people are reacting to them. Two strong examples of that really yesterday, particularly in the US, where we had Peloton, one of those stocks that has done very well through the period of lockdown and discussed in its strength there. But that's been challenged, particularly at points last year. And yesterday, the stock was down some 24% as it was scaling back production. So that's one thing to note. So really a headline grabber and something that was acted upon in the market. And then Netflix, that name that we're all familiar with, had results last night, and good results for the end of 2021. But really, it's about looking forward. And it was their guidance that has caused a little bit of concern for some of those market participants. And what did we see there? Guiding for 2.5 million subscriber growth on a subscriber base of around 220 million. The market was thinking of something more in the region of 5 to 6 million. So quite a difference in reported numbers there, or in guidance, I should say. And that's caused that stock to sell off around 15% after hours in the US last night. Just bringing it to Omicron then and thinking about where we're seeing some impacts of that. US weekly jobless numbers yesterday did show some impact of that, with an uptick in the weekly number back to the levels that we were seeing in October of last year. And then this morning here from the Office of National Statistics, we've seen the weakness coming through in retail sales for December. Retail sales down some 3.7%. That's not surprising, however. We talked about the strength that we saw in October and in November, and really people taking that very conscious decision through December to step back their activity in the run-up to the Christmas period. I'll leave it there for today, but please do look out for our Do More With Your Money podcast later. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.